Harvesting Growth, a comprehensive guide to AGCO Corporation, AGCO. As of February 4, 2026, AGCO Corporation, ticker AGCO, stands as a unique, high-tech powerhouse in the global agricultural industry. While names like John Deere often dominate the conversation, AGCO has spent the last several years reinventing itself. It is no longer just a manufacturer of heavy metal, it has become a leader in smart farming and precision agriculture. For a potential investor in 2026, AGCO represents a play on two major themes: the essential nature of global food security and the high-margin world of software-driven farming. However, the company is currently navigating a cyclical trough, meaning that while its technology is ahead of the curve, the economic environment for farmers is challenging. This 1,500-word guide breaks down the brands, the PTx technology revolution, the financial risks, and the 2026 outlook every investor needs to see. 1. Who is AGCO? The multi-brand strategy. Founded in 1990 and headquartered in Duluth, Georgia, AGCO is the third-largest agricultural equipment manufacturer in the world. Unlike its competitors who often rely on a single primary brand, AGCO operates through a differentiated brand portfolio. This allows them to target specific types of farmers across 140 different countries. The Big Four brands. Fendt, the crown jewel. Known as the Mercedes-Benz of tractors, Fendt is a premium brand focused on high-horsepower machines and extreme precision. In 2026, Fendt is the primary driver of AGCO's expansion in North America. Massey Ferguson, the global workhorse. This is one of the most recognized brands in the world, specializing in reliable, versatile equipment for small to medium-sized family farms, especially in Europe, Africa, and South America. Valtra, the Nordic specialist. Based in Finland, Valtra is famous for its built-to-order tractors and is a leader in the Scandinavian and Brazilian markets. Challenger and Heston, specialized brands focused on high-speed planting, application equipment, and hay and forage solutions. 2. The PTx revolution, the brain of the farm. The most critical development for AGCO investors in 2026 is the PTx Trimble joint venture. In 2024, AGCO completed a landmark deal to merge its precision planting business with Trimble's agricultural assets, creating a new brand called PTx. Why PTx is a game-changer? Historically, if a farmer wanted smart technology, they had to buy a brand new $500,000 tractor. AGCO's PTx strategy is different. They focus on retrofit technology. Mixed fleet solutions. PTx allows a farmer to take a 15-year-old tractor, even a competitor's brand like John Deere or Case IH, and retrofit it with the latest AI-driven sensors, autonomous steering, and seed placement tech. Higher margins. Selling software and sensors, PTx, has much higher profit margins than selling raw steel and tires. Autonomous tillage. Just last month, in January 2026, AGCO won several industry awards for its Outrun autonomous tillage kit, which allows tractors to work the fields without a driver in the cab. 3. The financial landscape, navigating the 2026 trough. If you look at AGCO's stock chart in early 2026, you will see a company that is successfully navigating a difficult cycle. The agricultural industry is cyclical, meaning it goes through multi-year periods of boom and bust. Current financial health. Revenue. AGCO reported net sales of approximately $11.7 billion for the 2025 fiscal year. While this was a decline from the record highs of 2023, the company has managed to keep its operating margins around 7% to 7.5%, significantly higher than they were during the last market downturn in 2016. Dividend and buybacks. As of February 2026, AGCO maintains a quarterly dividend of 29 cents per share. The company is also aggressively using its cash to buy back its own shares, signaling to investors that management believes the stock is undervalued. Earnings beat. In its most recent quarterly report, February 2, 2026, AGCO surpassed analyst expectations for both earnings and revenue, driven by strong performance in its global parts and aftermarket segments.
4. Critical risks. What could go wrong? Every investment has a bear case, and AGCO is no exception. Before buying in 2026, you must consider these three headwinds. Declining farm income. When crop prices like corn, soy, and wheat are low, farmers have less cash to spend on new tractors. In early 2026, farm income in North America is under pressure due to high input costs, fertilizer and fuel, and stabilized commodity prices. Inventory management. Because demand has slowed down since the post-pandemic boom, dealers have been sitting on too many unsold tractors. AGCO is currently underproducing, cutting factory hours to help dealers clear out this inventory. This hurts short-term profits, but is necessary for long-term health. Tariff and trade risks. AGCO is a truly global company. In early 2026, new trade tensions and potential tariffs between the US, Europe, and Brazil could disrupt the supply chain or make AGCO's European machines, like Fendt, more expensive for American farmers. 5. The Farmer Core Strategy, changing how business is done. In 2025 and 2026, AGCO launched a new distribution model called Farmer Core. This is a massive shift in the customer experience of farming. Traditionally, if a tractor broke down, the farmer had to haul it to a dealership. With Farmer Core, AGCO is bringing the dealership to the farm. Mobile service. A fleet of mobile service vans equipped with advanced diagnostics and parts can handle 60 to 70% of repairs directly in the field. Digital proximity. Farmers can order parts through an app and have them delivered to smart lockers located closer to their fields. Lower overhead. This model allows dealers to operate with smaller, more efficient buildings, passing some of those savings back to the farmer and improving dealer profitability. 6. ESG and the green tractor. Sustainability in 2026. Agriculture is one of the sectors most impacted by climate change, and AGCO is positioning itself as a leader in sustainable productivity. Soil health. AGCO's newer machines are designed with VarioGrip technology, which automatically adjusts tire pressure to prevent soil compaction. This keeps the soil healthier and increases crop yields over time. Clean energy. AGCO is currently testing electric and hydrogen-compatible engines through its AGCO Power division in Finland. While fully electric large tractors are still years away, hybrid systems are already beginning to enter the market in 2026. Precision spraying. Using cameras and AI, AGCO sprayers can now identify individual weeds and spray only the weed, not the whole field. This reduces chemical use by up to 60%, saving the farmer money and protecting the environment. 7. Investor strategy. Is AGCO a buy in 2026? In early 2026, analysts are divided on AGCO, with price targets ranging from $100 to $180 per share. This wide range reflects the uncertainty of the agricultural cycle. The value play. AGCO is currently trading at a price-to-earnings ratio of approximately 22x. While this is higher than its historical average, it is because earnings are currently at a trough. Many value investors believe that as the cycle turns in 2027, earnings will skyrocket, making the current price a bargain. The tech play. If you believe that farming is going to be dominated by AI and autonomous robots, AGCO is perhaps the purest way to play that theme because of its retrofit strategy. They aren't just selling to farmers who buy new machines, they are selling to every farmer with an old machine. Conclusion. The long-term harvest. Investing in AGCO is not for those looking for a quick flip. It is a bet on the long-term industrialization and digitization of the world's food supply. In February 2026, the company is proving it can remain profitable even when the industry is soft. By leaning into the PTX software revolution and the Farmer Core service model, AGCO is building a more resilient, high-margin business than it had a decade ago. The verdict. If you can handle the sawtooth volatility of the agricultural cycle and believe in the transition from big iron to smart iron, AGCO is a top-tier industrial pick for 2026.